Hello and welcome to this week's Ferrari Financial Market News Summary. Well, as we predicted, it was a pretty volatile week on Wall Street, with a good attempt in fact, Monday and Tuesday at a rally to pare some of the losses of the last 2 to 3 weeks. The reason for this, of course, was the Federal Reserve injecting billions of dollars into the banking system to calm investors' worries about an evaporating credit situation. The Federal Reserve really following the lead of the ECB, the European Central Bank, which did exactly that a few days before. This wasn't really enough to calm the fears of investors, as the market action on Wednesday and Thursday really proved, when there was a sharp sell-off again. So we've pretty well ended up at the end of this week where we ended up at the end of last week. Let's take a look at the chart and see where we're going. Rather than just concentrate on this week's chart, I really want to still look at the 3-year chart for the Nasdaq Composite Index, because this of course is the action this week, and I think you can see here the very steep drop down to the short-term moving average. Why I want to show you it on a 3-year chart is because there's 2 trend lines I want to draw in here for you today. First of all, the short-term trend line, which is really the last 9 months or so. If I draw that in here, starting at the bottom, crossing the low we saw in February-March, and then ending really just underneath the action of this week, you can see that if it is going to be a short-term correction, we've still possibly got another nearly 100 points for the Nasdaq to drop before it will really hit that short-term trend line and hopefully get a bounce off of that. The more worrying line that I want to show you is in fact the much longer term trend line, which extends back over the 3 or 4 years, which is really more in this sort of area. And really, if I were to lock that in at that point, you can see that there could be in fact a much larger worsening picture developing for the market, because really a shoulder may form at around about this area here, but in fact before this sell-off or this head and shoulders pattern is completely through, we could see a deterioration right back down to 2,300 or even as low as 2,200 for the Nasdaq towards the end of the year. We hope this is not obviously the scenario that will unfold. We hope this is in fact just a short-term correction, but events will have to unfold in the next month or so before we're really sure which scenario is going to be in place. So, are we in for another week of consolidation, or will the market really make a move to the upside or the downside this week? Our feeling is that we're in for more volatility, and really consolidation is the name of the game. And unless we get any seriously bad news about the credit market situation, we feel that consolidation will continue, with possibly another attempted rally this week. But will it actually transpire into something more concrete remains to be seen. We feel the market is really waiting for the Fed to give some indication, and certainly before the September meeting, that it's liable to cut interest rates to stimulate the economy. But whether this is forthcoming or not will really determine whether any rally has teeth to it. Our strategy at the moment is one of hedging our bets, as there's certainly money to be made on the upside and the downside at the moment. But a longer term call on market direction is much more difficult to do at the moment, until we get more of a feeling of which way the Fed is going to move. So until next week's market summary, it's goodbye from London.